Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And I just wanted to do a quick video today, get into some important things. First, I want to get into the economic data today. Going along with the trends, challenger job cuts, 84.638. That's higher than the previous 82.30. The trade deficit, 67.4 billion. The consensus was 63 billion, 63 and a half, way higher than expected. And if you look at it, even though initial jobless claims were low, 217,000, that was higher than the consensus. 215 continuing jobless claims, 1906, which was higher than the expected 1889. So if you look at this data, there is the non-farm productivity, which is higher than expected, 3.2 instead of 3.1. But if you look at this data is not looking good. A lot of this data is very poor. And so the economy is inching towards recession. It's not there yet, and I don't think it will be there this year. It's an election year, so they'll make sure they'll lie, cheat, and print out all sorts of fictitious numbers in order to do so. So anyway, that's the first thing. And I also was going in, so that's the first thing. And another thing that shows the economy's poor, and I was looking at this, is Costco. Now the earnings beat while the revenue was a miss. And so when the revenue was much less than expected, that's the top line. That means how many people are spending. That's sales. And when that's doing the bottom line, they could easily, cut costs and do all sorts of other things to depreciation or whatnot, to play all sorts of accounting gimmicks to get that up. So that doesn't mean much in terms of how well the economy is doing. But when companies are missing on their top line, that is a big thing. And Costco is, from what I've read, is the more affluent consumer in the U.S. So you can tell that affluent people are even feeling the burn. And you can tell by the gold bars that are being sold. A lot of gold's being bought at Costco. So they're starting to understand that there's problems coming, and gold is where they're running to. So that was a big thing in Costco. And one other thing is, I was looking for articles. I normally just scroll things. I get so many updates on my phone and I read them, but it's hard to find them and store them. So a lot of times I'll go after work to do these videos looking at articles, and I could barely find much doom. I even went to Zero Hedge to see, because the economic data was bad, and this just shows how bullish sentiment is. I went to Zero Hedge and I had problems finding. Now, a lot, politically, they have huge amounts of doom, but even financial. And I mean, this is what euphoria looks like, where you can't find hardly anything bad. Years ago, even pre-COVID, I'm going to go back to 2013 through 19, you could find all sorts of negative articles about the economy and whatnot. You can't find any now, and that's because we're in euphoria. But also, one reason I do this is I look at mainstream. I look at everything, really. That's one reason I know mainstream are liars, because I read them. But also Fed, this was, I finally decided to, found a nice market wrap-up, ironically on Zero Hedge. And it says, Fed appeared in the Senate, prepared remarks. It did say it's not far from confidence to cut rates this year. Said that inflation is back to hit 2%. So, yeah, he's definitely going to cut rates. That's straight from the mouth. So I always said that he's going to reverse course. He has taken longer than I expected, but he is reversing course. And he's just trying to prepare the markets for it. So that's the other thing. And the other thing, too, is I was looking at this article in Yahoo Finance. It says, jobs reports is set to release Friday morning and expected to show some signs of cooling after robust job gains. And this is what I'm saying. They try to prime the psychological effect so the market isn't surprised at anything. This is how the powers that be, manipulate the markets. They do it through psychological brainwashing. They do not do it through mechanical uses like buying. I mean, they do it sometimes, but their main tool is psychological. And that's why they have Yahoo Finance. It says the monthly report is expected to show non-farm payrolls rose by 200,000 while the unemployment rate remained flat. Key numbers, blah, blah, blah. The report test. This is in Yahoo Finance, so you can look at that. After an overheated surge, we expect a cooler but solid pace of job growth and expect a spike in earnings to be reversed. So they are expecting lower wages. And the Fed has said many times they want to lower wages. They're worried about the slave workers, getting a raise. Great people you have running everything. They're worried about you getting a raise because that's bad for inflation. So anyway, they say that supply and demand conditions have come to better balanced. I'll post the article. You can read it below. But yeah, if you look at the actual economy, looking at the data, we followed this every day. You can go back to all the videos I posted this week. It's not looking good. My prediction for the job numbers, it'll probably come in around that. Are we actually experiencing job growth in this? No, we aren't. That's my opinion. But, they use fictitious numbers. So, that's basically what's going on. So that's my opinion. Gold keeps going up, and I think gold's sniffing out that rate cut. And not only that, the economy is not looking good. This is a healthy environment. So if we do get a poor jobs numbers, much lower than expected, then I think gold will have a big day. Now, if we have a strong, robust jobs numbers, this could be the correction in the gold's move. So we'll see what happens. I'm looking at the futures overnight. They're up 130 on the Dow. So, but yeah, if we have now in terms of stocks, if we have a strong gold jobs numbers Friday and strong inflation readings, meaning good inflation readings for the Fed, meaning comes lower, 2% or lower, or shows it's on the path, that will be bullish for the stock market, and that will be euphoria. So today, Friday till Wednesday of next week, lots of data coming out. We'll see what goes on. So, and this might lead to a correction in gold. But if we have poor job numbers, expect gold to take off, especially poor job numbers in a low inflation data, because then that gives the Fed room to cut rates. Because and maybe that's what they want. Declining data but low inflation, so the Fed has cover to cut rates. So anyway, that's all I have for today. Hit that like button and subscribe if you already haven't. I will see you next video.